Okay, good morning, all. This is Fadi Hemzi. It's our first webinar of 2022. Welcome. I assume you all had a great Christmas and New Year's. We did not have a webinar last week because there wasn't much there. Of course, that night we ended up going short SPX, and yesterday we covered it. We did not put a trade on. Vol was too high, we felt. Of course, you saw the vol yesterday, just exploded. We're going to go through that. But the 92 handles down. Thank you very much. It's 78 handles in 4 days. I always measure risk versus time. Why? The option trader. Now, I'm not saying I'm a good option trader, but I'm an old option trader. I've been around. I was trained by some of the best in the academic part of it. You know, the Black-Scholes types. Those who finished that. There we go. Jobless claim 207. And so it's a logarithmic return of x minus s vol and well, not delta, but well, you can x minus Hamilton's delta, the volatility, the vol, the implied vol. So it was a quick hit. I know a couple of guys who went, just use the cash. They did really well. That was intended. And we'll keep hunting. I have also noticed the Timer Digest website is not showing up. Oh, it has moved. Okay, hold on. Where is it going? Oh, see, this is not good. This is not good. So I guess they were not that digital. I know they're emailing, responding my emails. They're recording our positions. We'll still follow them, but even though they're not doing any publishing and their website is not active, I think they had data issue as described last year, so they've stopped publishing last February, I think, or the last issue, the one I was named the Timer of Decade. That was just after that. That was the last one. I think 704, whatever it is. It's on the website when you log in. Anyhow, quickly, just let me mention this: when you come in and log in, if you're having Yahoo, you're gonna have problems. We have had issues with email bounces or delayed. You don't get our password. But coming into Pro, please watch this video. We update this as we do a big time video. We do an update, and this gives us what we do. But please take a look at that. Okay. That's the issue, 704. That was the last issue on January, January 20th. So they haven't done since then. So anyhow, but it's important that you watch the video. That before you take the first trade. Why? It tempers your expectation. It manages that so you know what to expect, what cycle, what to do, what not to do, and then you still may have questions. No problem. Send us the email. Yeah, just don't send me an email before watching that, because I'm going to quiz you. But I know you didn't watch it, and you know what happens in the Navy. Yeah, you're gonna go in the brig. Just along with the other day with Admiral Tico was at the brig. Yes. Okay. Anyhow, this was last trade that we did. That was an option trade, and I underestimate that. I'm a dummy. You know what do I know? I'm just another poor dumb immigrant. PDI. Look at what 4710. Let's go here. I'm not trying to go to our glory, no, but I'm trying to go over to show that hey, we're back on the saddle. Okay, we bought it here, and look where it ended up. We were off by quite a bit. 47.10 was, I think, here. Yeah, went through that. Right? Yeah, yeah, this day went through that. I was shooting for a new high. I missed the next one that was huge. Okay, then we sat sideways, and I said something is wrong. Something is wrong. And I'm looking also. Look what is happening up there. Remember, we're looking at it like this. Remember, chart is all rear view mirror. So as data is coming in like this, I'm saying something is wrong. Let's go short. Boom. Okay. Now we're flat. Why? We also broke 20-day. That's a 0 sig. Excuse me. And there's a talk out there. There's more to come. Probably is. I don't know. I just think that I don't want to be short into earnings season. Remember, multi-dimensional chess game. The moment you think you know it, there's another angle you didn't think about. That's why you use 65-inch monitors. There's not enough room to look at everything that you need to look at because there's always something else. That's why we use chat rooms, because there's a collaboration of all of the sharpest people I've traded with that come in and say, Fadi, did you think about that? How about that's coming? Look at this data. Or look at like our guy, Peter Cook, how he manages throughout the day to run that chat room for me and with me. And I've learned so much from him because you learn there's so many different angles to look at, and I'm learning every day, so I love it. I absolutely love it. If I stop learning, I'm gonna die. And as they say, Florida is a waiting room for God. Yeah, you're coming down here to die, right? So I don't want to be part of that stat. Hey, Zach, how are you? So, having said that, let's go to our normal routine. We're just getting carried away here on this call, but I want to make sure new members coming in. Oh, plus we have reduced our prices slightly for these two because it was getting a little out of control. It was getting a little too much. So we told people, I've got some downshifted. Go and downshift. Why did I do that? I make it a little bit easier on me. So less production work on my end, and also more frequent. I'm doing these Wednesday stuff, and when we do a trade, we may do a chart or two, but mainly we're giving you this, okay, so actionable. Because I also noticed not too many people going through the charts. The charts take time to develop and post. People were not looking at it. I said, okay, you know what? We'll give them this visually open to all. I don't care. It's the trade that is crucial, and that's going to be here. That's going to be here, and on the email for the cash market. Obviously here too. This is the trade, by the way. This is for the basic. This is for the pro. The pro has the option. The basic is just targets, and we reduced the targets too. There was an issue on the target of primary and secondary. I talked to my other trade desk in Chicago, and they said, "We don't do your secondary." What? We do the whole thing. Why? Some people are trading 5, 10, 15 contracts. When you do 80% and 20%, it's easy to get 80% filled. That 20%, they can be stuck. And what if it goes 2 or 3 days later or a week later to get to secondary, right? And you have a pullback, one. Two, now the volume has really dropped, and because there's no interest on that strike. And the theta is killing you. So now it's even a bigger hurdle to get to a secondary. I said, hey, that makes sense. We'll go all out. So it's no 80 and 20. It's 100%. You're going 100%, you come on 100%. No, now it's becomes more surgical. It's like putting a JDAM on a 500 bomb. Now I can decide not just the building. I'll decide which window is going to go through. Thank you, JDAM. The boys, I think that's Anaheim division of Raytheon who did the JDAM. Okay. Anyway, having said that, let's go to our normal routine. So I consider this housekeeping. I've done that. Let's go to Econ calendar. This is the first week of the month, and so jobless just came in. I think I'd read it out to you. 207. Let's see what else they have here. Anything more on detail? 207, 204. Okay. Yeah. It's kind of normal here right now. We're kind of normalizing at this level. Not bad. Big number is going to be tomorrow, of course. We're going to look at that too. ADP came yesterday. Gigantic, enormous, whatever you want to call it, number. Revised down from last month. Consensus 414. Look at the range. Okay, here's the consensus. Look at the range. It shoots twice the consensus, way over the range. So if this is any clue, tomorrow's going to be a big number. So if that's the case, you may see some activity late today. No one has the leak. There's no leak on this. It's very difficult to leak this. Two people get this: Powell and Biden. At about 4 o'clock in different emails. So there are cells like CIA. So no one, even BLS doesn't have the Bureau of Labor Statistics, have the wherewithal to understand what the total number is. And it's then embargoed in the morning, and it goes out at 8:30. So you boys on the HA prop day trading systems, I'll see you there tomorrow for that. Be here early. Remember, it starts at 8:30, so we're gonna log in much earlier, okay, to be ready. That's for tomorrow. This one, that's a preview. No, caveat. Not always ADP is the right indicator. Okay, don't go there and bet the house or bet the farm. Take a look at the charts. Take a look at the analysis. I like to look at 2 or 3 minutes later, if I can, what the BLS is showing. The devil is in the details. I want to know what's happening in manufacturing, with housing, with healthcare. These are things you want to see. Whether hiring or firing, line item by line item. And here's the number for tomorrow. And remember, this is a consensus opinion. So it's a survey. But I want to see what's happening here, for example, this area. Okay. Oh, sorry. No. This one. Manufacturing. I want to know what this is doing. Yeah. Okay. Headline is crucial. I don't care about unemployment rates. This is right now is too noisy, especially with people not decide because of health reasons not going to want to work. But I want to see private payrolls, manufacturing. I want to see healthcare, which is not here. You have to go to BLS. And then last item. To me, I always look at it as you know. This moves hardly, but hey, my job is to read the tea leaves. I want to see if there's any uptick on this. This shows the pressure on overtime. Are we tightening up? Is the economy going a little bit faster than we think? Okay. Factory orders tomorrow. That's fine. Yeah. I mean, it's good to know, but let me just take a look quickly for you. And let's see. Yeah. Yeah. Well, I'd be surprised if we get 2.5. I'd be surprised. So, okay. No Fed speak today. Yesterday, the big number was FOMC meeting, and you saw. I don't know if you get the emails or not. If you saw, you see the internal discussions. And now I haven't read it myself, but I read the headline of it on Bloomberg that said basically folks, the members are looking at what do you call it? Maybe they tighten up a little bit sooner, and also to how to dump the balance sheet a little bit faster. Not how, but what timeline. So there's a lot of dissent there, which is good though. Let's see. Listen, if you have democracy, you need to have also a discussion, even at your Fed level, so that there's a consensus consensus is built. All right, let's go through charts. We're done with the econ calendar. All right, so okay, big day yesterday. Hit 20 bar. This is all-time high. Okay, it's not on the closing basis. It's on high of the day. Yeah. Okay. 200-day is way too far. Should we go and test 50 bar? That's a possibility. Do I want to sit here for that? Not necessarily. But I'm not going to go long before that's tested. Why? It's how the options work. That fury there, the pressure is not going to be between. Today won't be like that, and we don't know what Friday is. I don't want to go into a position like this for Friday. And if I'm losing a little bit of that, so be it. The low there was what? The low was 4,690, 4,700. We closed out the low. I understand that. 4711 was what do you call it? Wasn't the name of a German cologne? A men's light. I think my dad used to have it. 4711. I forget. This is 60s. That was a 0 bar. We went through that. This number is 4670. So there's another 30 handle. Now, by the time we get there, remember, they got to get close to each other. So maybe there's 25 handle there. That was 92. Let me book 92. We're going into earnings season. Plus, if the ADP is good, I think you're going to see a pressure on the upside for tomorrow. I think are we oversold? Oh no, by no means. So tomorrow could be a good gamble. Given the unknowns, I'd rather step out. Yeah. Now, on technical, it's a different story. You see what they did with Microsoft? Yeah. What's that Peter was talking about yesterday? He says last night he went long. The night before, okay, he went long Microsoft. Poor guy. I mean, he's like as I said, like a JDAM. He always his talk is like you won't believe. This one was an aberration, of course. But he's man enough to talk about it. You know, he trades naked. He's open. He says, "Hey, this is how things are," and that's what I did. So that's the sign of a good trader. It's like if you're not, do you go on Tuesdays, pay your bookie or not? If you're a good gambler, you're going to pay your bookie on Tuesdays. Okay, now let's just be here. It doesn't have to be your old-time bookies. It could be now online, whatever. Online is electronic. They take it away from you, but that's the old-time bookies. If you don't show up on Tuesday, you have an excuse, you're not a good gambler. Stop gambling. That's not for you. And you're not winning. That's why. Okay, you see what I'm saying? So, yeah. So if you're winning, you're going to go and pay your bookies, no problem, because that's their fair share. They won. Anyhow, longer story. Now, one more thing. As we wrote to Time and Digest last night with our commentary, which was later on sent to PMT members, was that we had a spike here in up-down volume. And so is this the dump we were looking for? Is this the puke? Maybe. or yes. You can't say no. This is pretty radical. It was pretty strong, very negative. But it is a puke you could see. Would I wish it was a little bit higher? Yes. But they looked at almost came to the same ratios for NYC versus NAS. Remember, this is all of NAS, not the 100, or not. This is all of NYC, not just SPX. So, would I go back in and get long? I mean, get long or short? Most likely, if all things being equal, I would probably go back to get short. But ask me that at like 11 o'clock Friday tomorrow. Yeah. Right. Gotta get this behind you and the action after it and so forth, and then analyze and so forth. And get you a chance to actually read that BLS one more time. You can't, sometimes you cannot even open the BLS 2 or 3 minutes after the number. There's so many requests coming to that website. You just gotta go there and see what they got. All right. What else? So we have CI crosses. It peaked. That was another clue, by the way. Look where it peaked on Breath Trust. By the way, I owe this to my dear friend Jason Grupfert of Sentiment Trader. I urge you, if you don't follow him. We have no relationship. We're just good friends. We do share our research. This indicator is from him, and it was buried in one of his charts. And I told him, "What is this?" He wrote me this is how I calculate it. That's how it comes. I forgot who it originally came up with. So I sat down and wrote the code. That told me also I get be cautious that day. Okay, that's why after the close we went short, and then look what happened here. I'm sorry. We held our short. I'm sorry. No. We're already short coming in. No. But as it edged up, I knew I have a Let me correct this. I need more coffee. I knew that I'm getting a little vibration. So expectation-wise, I prepped myself for a little vibration. That is, it may shoot up a little bit. At margin, it will move the line, and then some. Then it rotates, right? It did day before yesterday, on Tuesday, and you see it hit, and I thought this is it. And look at what happened yesterday. So I think we talked about the Breath Trust the other day too. That this is something you want to watch. It's a little bit cleaner than McClellan Oscillator. Okay. What else I should tell you? Nothing. Okay. Let's go to Canaries. It's almost same pattern. My interest is this. We're going to get into detail here. Go to DT, which is the muscle. We want to look at the muscle. By the way, I still cannot explain this to myself. We have never seen this from all-time high to here to there. There doesn't seem to be any error. We have asked. Nobody has come up with the error. It must have been one of the components went nuts. I need to research that and find out, but it went nuts. So what's the D-trender? D-trender, if you're running large amount of money, and I don't mean necessarily futures, I'm not talking about derivatives, but let's say you have a huge fund you're running that's cash based. With it, you can still add some options to it, but mainly, let's say the options are protection or yield enhancement, but mainly it's a cash based portfolio. You look at the trenders all the time, and you run a series, like for example this one. You like to see what these levels were and why, at what time frame we did what, and look at that. That was 35%. That's huge. That means the difference between where we were here versus the 200 day was 35%. These are always a signal that something is wrong. We cannot go that far and continue going. Okay, something is broken there, or you've exceeded the bubble is there. Okay, so now gotta get cautious. And this is the 50-day. So bigger boys, look at this. And my problem is this right there. We can't go to a 50-day. Hello. If that's the problem, this drop is not enough. And look, we got yesterday 3.66. Yeah. Something to write home about, right? So now let's do our counts. Negative, set 3. Almost. Let's say half. Let's say half of these 8 indicators are negative as a scoring mechanism. That says we got a problem here. If it gets to 5 and 6, we're near the bottom. It's same thing as when you were too high. They're all positive. When to all positive, so it's a contrarian system there. Okay, if you get too many positives out of the 8, let's say 6, 7, 8. Be careful. Yes. Now remember, tops take time to form. So you can go 6, 7, 8, and then you're done. But bottoms are sharp. So when it drops, the fear comes in. It's a escalator versus elevator. The reaction is faster. It takes longer to produce a top and see it, and we'll also talk about it on this chart when we get there. This is a good example of that. We'll get into that, and then so we see it in different ways. You see that continuing pattern there. It manifests itself in the various different charts. That's good. Excuse me. SP1 Momo. All right. New highs. Well, this is interesting that we had 61 new highs yesterday. Is that correct? Holy mackerel. But by the way, when in doubt, reset. Yeah, refresh. Yeah. Interesting. Okay. But this told us a little bit forward that this is too far back, in my opinion. That's May. That we're gonna have some shakes. We did have some shakes. And we're here. This is what November, so it's right before Thanksgiving. So that's a little bit too far. May to November, I wouldn't count that. But we're down there. We're down there. Over 80, over 100, I would start worrying. We're still below it. That this is when we peak in the new highs. This is 56, 52 weeks new highs for S&P names only of the 500. Okay. When you get about let's say 140, definitely the top is coming. I mean, we're either at the top or it's coming. We're maybe a month away from the top. Anything above that is crazy. You could see it. You see it 220? That was huge right there. You don't see that. That's maybe aberration. Maybe one flash, one day in that week. Probably this is a weekly data. This is daily data of the same time series. But this gives you a better picture. If you go back here, you can see what we have seen in the past. You can see. And then reversal. You see the bottoms? Yeah. See the bottom? So I urge you to take a look at it. Data is available. Just plot it. Most platforms have it. This comes from TradeStation, but it doesn't mean you're going to have it. Now, look at what this says. Buy. So no new lows. So that continues until you get that. And you saw how we dropped. Okay? Now, we did not go too far on Momo. On SP1, we were between 1 and 2. So that was a nice head fake, guys. Nice head fake. It kind of stayed in the channel. +1, okay? +2. Got to understand Sigma channels. It's a superset, or I would like to say, I know John doesn't like that, but Bollinger is a subset of Sigma channels. So I call it Sigma because, I mean, he uses this one, and the center. He doesn't use the rest of them. Well, one night by mistake in 2005, I discovered it because I was so tired. And this is I was living on the beach in California, Southern California. And I left the machine on. And I had wrong inputs. You probably heard the story. In the morning, it was a different picture. I was alert. I had my coffee and no distractions. And as you know, living on the beach in California, yeah, you have a lot of distractions. So long story short, I looked at it and I said, huh? So I called him. He goes, yeah. But, I mean, I had discussed it in my book. I said, where? I read your book. You gave me 2 of them. You autographed it. You gave it to me as a gift. Where is it? I go, there's 1 page on it. I said, Johnny, let's go to dinner. So I take him to his favorite Persian place. I take a bottle of whiskey with me. He liked whiskey. The place didn't serve alcohol, but I owned the place technically at the beach. He said, let's sit down and talk about it. I said, Johnny, what's going on here? You're not talking about it much. He goes, listen, I concentrate on what I do. You like to do something different, that's fine. I said, okay. Just to be clear, I will give you credit. I will tell you what happened. I'll tell you the story. But you gotta realize, standard deviations or sigma, that's what I call channel, not a band, but it's, hold on one second. Sorry guys, there was a sound in my headset. I have no clue what it is. I didn't want to lose you guys. Audio check. Can you guys hear me okay, by the way? Just let me make sure I check that. Is there anything with the audio? You didn't lose me, did you? Just now? Okay, fine. Thank you. Moving on. So I said, listen, Sigma channel. Sigma is statistics, came from Ottoman Empire. It's been around about 400 years. I'm going to call them Sigma channels, not a band. And he says, what's your purpose? I said, I just want to build rules of how to read it. And one of the things I found out is that you need to look at +1, +2. Okay, and then a special note, and also on the downside, obviously -2, -1, -2, and then a special note about indices at 3 sigma events, at 3 sigma and -3 sigma, and then if you go to vols, you also look at 4 sigma. Okay, so I developed it, published it, been using it since then. I urge you to take a look at it. It's crucial how you can look at things because and you basically, for example, this chart is a vol of the vols. If you think about it, this is a volatility measure of a vol index. I know it's getting a little bit esoteric. It's not that difficult. If I can do it, you can do it. Okay. All you need to do is pay attention to it a little bit and get used to it. Charts you get used to. The thing you don't want to do is keep changing your charts. Then your memory is going to fool you. So don't go there. So what? Having said that, where were we? We were between the channels. We peaked out, came back in the channel. Okay, again, +1, +2. Then you go this way. It's coming. Data is coming to you like this. We peaked out. You see the top? Look up there as you're looking down here. Boom, boom, boom. Okay, and then we peak again, running up. Okay, and then dies. Okay, now this is yesterday, obviously, but we're in the channel, so still this is saying we should go up. But look what Momo is doing. Momo is losing his ass. Pardon my French. We don't have ladies here, do we? I'm sorry. Edit that, young man. Okay, whatever. Momo is dropping. Now, we know Momo is a smaller brethren of SP1. It's often used as a timing tool for this. Not just the vols itself, not just the sigmas itself, but also showing us where this gives us a bullish or bearish divergence. Okay? The fact that we went up, but Momo said, no, I don't like that, says to me, you're holding to your short, young man. And I did. So, again, a little tea leaves. We look at this, by the way, we look at, select these charts we have in the chat room. If I see something I need to talk about, I just switch over, talk about it, and switch back to the charts that we do. SQ. This is not unusual. This basically said, part of the mission accomplished. Some people covered. Why? 92 handles. Same as I talked about earlier. It's an issue of X minus S, your delta, and your theta. I'm not big on Greeks, but I understand Black-Scholes. Programmed it back in 1978 on my handheld HP 65. So when you do, I'm sorry, 67, the one with the printer. If you and programmable. Once you program that, you get that sense, and you say, okay, what do I need to do now? Okay, this pulls back, which says what? The downside tail risk. Tail risk is a, think of it this way, it's a bell curve, right? Except it's vertical. The bell curve. It says the downside, which is this end, has mitigated somewhat. Why? They covered. They covered some of those shorts. They took partial profits. That's why this drops. This is not tradable. This is a computational index. I forgot the name of the guy. This brand, it's a friend of Admiral Esposito, not Tico Esposito. We have two admirals here. We are not sure yet which one is smarter than the other one, but they're both Romans. So, long story short, from the seagoing history they have, the Romans, of course. But anyhow, long story short, that says you can't trade it, so you cannot manipulate it like you can do with VIX, the new VIX. Okay, but that says to me, some of that's mitigated. Had this gone up, it told me we have a bigger shortcoming. Okay, because look at, again, we're measuring against itself. This is, again, sigma chance. It was at +1, +2. Okay, so it did not, it meandered there, and now it pulled back. So watch where this goes. When it gets down here, it's a buy signal. 124, 125, there should be a buy signal. Now, that's assuming the sigma levels stay there. If the sigma levels change, you have to change. Again, it goes back to sigma channels. Measuring something against itself. All right. Okay. Okay, let's go here. This is, I have to check this. I think I'm right. Let me check. Because I've been wrong before. That's why. Yeah, we're running Feb. I'm sorry, we're running Jan, long Jan, short April. 3 months forward spread. Okay, long Jan, short forward, and that differential is -422. Okay, look where it's gotten before. I mean, when was the last time we were down here, Jack? Yeah, that tells me, hey, we're up there. We're up there. Remember, this is 30 minutes now. So minutia, I'm looking at it during the day. We talk about it in the chat during the day. Just to take a snapshot, a few seconds, and go. But because they know the process, they know what to look for. But we went from this level of orbit, this level. Let's think of it as levels. This orbit to that orbit, and now here. So let's see how it gets mitigated. Now, there was a little run up last night. Looks like we've given up all of it. Yeah, and Nasdaq is still down. We're down half a point. There's nothing. We're probably even on H22, ES H22. On NQH22, we're down 0.5%, 0.46, yeah, or 73 handles. So, but this is the ES. This works for ES. Very good for bottom fishing. Very good for bottom fishing. So we peaked there. Now, the bottom is when we get to a zero, by the way. Well, this is negatives. We got more to go. So probably we have another leg coming. I don't know when. But remember, these legs don't come all out straight. Nothing moves a straight line, okay? So maybe we'll gum up another couple of weeks into earnings, and then something else happens. They lower the boom on us. You just have to be ready. Remember, multi level, time and space, chess game. It is time and space, really, chess game, yeah. All right. We went to a new highs, okay? Look at the divergence, my friends. This is SP2, never been disclosed before. We're not going to disclose how the code is done, but it's amazing to pick that highs and lows. And we're at 33. So we're not oversold yet. We're probably going to sell. There's one possibility could be Friday afternoon. Let's say, remember, what spooked the market here was the Fed, obviously, because they're going a little bit aggressive. And as you know, the masters of universe, our hedge fund buddies, not the guys outside that you hear them with a motor. That's a different hedge. Yeah. But our hedge fund buddies in Stanford and New York told Jerome Powell, we don't like you. We don't like you that much. Okay. And that's what we sold. That's how you teach the Federal Reserve members what's going on. At the end of the day, the hedge funds own this world. You have to understand that. They do. Because some of them are bigger than certain countries' GDP. Okay. If you look at what Ray Deala does, 148 billion under management, that's the paid-in capital. Okay, you have to realize what the leverage they get. These guys get 4 to 1, 5 to 1 at those levels. That's how major banks really make money. It's out for hedge funds, lending them money for very respected, not the small hedge funds. We have too many hedge funds. They'll go away. Trust me. I have a little small one too. One mistake, I'll be gone too. But no, I'm talking about established, well-run, 15, 20, 30 years in business. That's where that money comes. Those guys are that we always knew if they didn't like what Powell was going to say, all this time he said about tapering, all that, looks like they're going to go even faster. Because why? Why are they doing that? The economy is getting better. Hello. Now, part of it is that the last year was in toilets. It's a benchmark issue. I'm not saying Biden is doing a good job. He's doing an okay job, but it's better than what happened last year, or let's say last 18 months coming into end of last year. So, and that's where the benchmark is. Same thing with inflation. We had a disinflation last year. Everything was shut down. We lost what, 10,000 or 15,000 restaurants. Okay, you have disinflation, so your goalposts have moved. You're too low. So the numbers this year looks too good, too high. I'm not saying there's no inflation. Listen, just go to Whole Foods. Look at the gas you're putting in. Look at certain parts of a computer you want to buy. Not because they're not around, there's inflation. Okay, so that has picked up. We're going to go back to normal. It's a mean reversion. We're all going to go back to normal. If the prices go too far up, nobody's going to buy it. So it's going to drop. It's not going to go ever. Housing prices is not going to go ever. You saw what happened in 2008. Now, we're not going to happen when we had 2008. We have what do you call it? I forgot the name of the guy, the gay guy out of Massachusetts, Dodd-Frank. We have Dodd-Frank in. You can't lend like you used to lending before. Now, we have a lot more shadow banking. I understand that. Some of those guys will get into trouble first. But we're not going to have a real estate crash. But the prices up here are way too high. Way too high. This is seller's market. It's not buyer's market. Don't be a sucker. Why? Mean reversal. Look at history of assets. Yeah. So that's what I see going forward. Treasury yields, hello. So I'm on the car on Monday, pick up something for Tico that's on an emergency basis. Was it Monday? Yeah, because he got sick on Tuesday. Yeah, but that has no relation. Nancy calls me in, Airbus, says, hey, Farry, 168. I said, oh, is that 10-year? He goes, yeah. I said, Jesus. So, and that's what's happening. So this is it. This is all saying the bond vigilante is coming in. Look at the levels. Remember, this is I think it's, how long did we go back? What time is it? I'll be quick. 9:08, guys. Sorry. I'm talking too much. We're going back 3 years. Okay. It's the last 3 years high. Okay, it's 2.8. We're not going there. We're down here. But these are the levels. Look at it come out of the levels. These are monthly levels, support resistance based on the prior month activity. Okay, so this is all of December based on November high and low. This is December coming in. I'm in a meeting. I'll call you right back. I'm in webinar. Okay. So I'm sorry. Uh, so what we have here is we rallied up here on the 10-year, and we were over a level here. We gotta watch how this progresses. To me, again, cars, 5 years cars, 10 years housing, 30-year is a long-term hold on what do you call it um, on the insurance assets. That's what they're using this for. Long-term obligations. They have to hold things. So most crucial to the economy to me, as to everybody, I think, is the 10-year, and that's where we are. So it's edging higher, it's putting pressure on, but bond vigilantes are coming back in and saying, you know what, we want a fair return on our money. Remember, part of the problem we have here also is, I mean, I heard it the other day. Somebody was pitching to a couple of guys. Was at the my cigar bar. I just stopped by to see a friend of mine. And as you know, I quit cigarettes. I mean, I quit. No, I never had cigarettes. I mean, I quit cigars, but I just wanted to have go in and maybe have one cigar. Last one before that was at Christmas Eve. I said, okay. And I hear this guy from New York just coming down here, relocating. He's pitching them to have a 40, 60% bond position. Bonds are too high up. If anything pulls back, it's going to be now. So be careful. The covenant with the net savers is broken. And so the problem we have there is we have too many people in the bonds here. And if there's any adjustment, I'm sorry, I get a little bit. If there's any adjustment here, I think the bondholders are going to lose the most. So I would be careful. Okay, let me go. It's what's 9/11. Let me get to this chart. All right, let's go here quickly. Okay, hold on. Okay, we pulled back yesterday. Is this a good ratio? I mean, yeah, we're good. Okay, sorry. Okay, on these ads. Hold on. Sorry about guys. Yes, I did look up for a chair. A week ago, it doesn't go away. Yeah, and this was for a friend of mine, but we always get sine waves. It keeps on showing up. My bad. All right, so Roy, cross is coming up. As you know, the last one we talked, which was 2 weeks ago, we had a big separation there. I warned you to watch for it. Obviously, during this last 2 weeks, we punched through a little bit higher. We have not gone over 75. Let's see, that's 78. Yeah, we have not. We're over 75. That level. Oh, I can't draw a line. Sorry. We're over 75. I'm reading a little bit too much into the minutia. I wouldn't worry about too much. But as we said 2 weeks ago, glad it didn't go below 55. And now, again, this tells me there's some anticipation, potentially, of going to the earnings. That's pulling up a tad. But they're working in line. What we had here was the divergence, the continuous divergence we were having here with this time series. Again, 2050 moving average. Here's a symbol you can get from stock charts at the end of the day. Okay, about an hour after the day. But that foretell a divergence, and it finally worked itself into getting a little bit sideways here. And now I think it looks like there's been a lot of selling in the middle, in the majority of the names. I'm not going to say middle names, because remember when we were up here, and this is dumping, it's saying that the big names are getting the attention. Okay, big names, the Googles, Apples, why? Good management, good balance sheet, good products. Okay, tested, verified, works. So they go and hide their portfolio managers hide their funds there. That wore off. That I'm saying it's coming back on wore off. That means some more buying has come in. They've redistributed all the top heavy names they had. Okay, so that's ends of this issue overnight. If you have any questions, please post. It's 9:13. I need to move on. Here's our overnight stuff just to see where we are. Very, very neutral. You see the Sigma channels. This is a little bit too much. Let's go to 60. There we go. All right. Why is it? Okay, I got to program that site. There we go. Okay. So there's a 60. There we go. As you can see here, I often like to learn from a fellow in Chicago to look at hourly charts and including overnight. And of course, I got to look at the Sigma channels and my CI. That tells me that we could be a quiet day. Makes sense calendar-wise ahead of tomorrow. And so don't overdo it. Don't get caught in the positions. Sometimes I do myself, but it takes one to know one. Don't get caught into minutia, especially this afternoon. Go away, do something else. Take care of something else. Go swim. Go exercise. Run a couple of your errands. If those of you do that, you trade constantly, or the day trade, or your intermittent trader type of a deal. Take a little bit of time off because your big day you want to be ready for is tomorrow. Now, notable here is crude oil, 3% up. That's huge. I'm sorry. Yes, that's a crude oil. Yes, that's a G contract, right? Because we're in February. Yeah, this is a February contract, right? It's up. Yeah, and volume is good. Yeah, it's up almost 3%. So that's muddies the whole water. We'll see. I'll stop there. It's 9:15. Any questions for me? Thank you all for attending. Remember, once you sign up, it renews for you constantly. Any questions, guys? We do this again next Thursday. As always, it gets posted on our website here under videos. It goes here in a few minutes. Once we get posted, it goes there, and we have quite a bit of we have about what 1,200 people there, and they see the charts and some of them are subscribed, so they get alerts. We also, when you get a chance, we'll send the email out to remind people you can take a look at it there. Okay. Thank you all. Thanks, Dennis. Appreciate it, sir. Closing this down. Let's see, and ending the webinar now.